Good day everyone. This is Cheryl Arcana from Group 1 of Income Taxation. So, I'm going to discuss about improperly accumulated earnings tax and gross income tax. So, first we have improperly accumulated earnings tax. So, what is improperly accumulated earnings tax? It is a form of penalty tax equal to 10% imposed on corporations on their improperly accumulated taxable income. So, why 10%? It is because if the closely held corporations did not distribute any dividend to their shareholders, then that means they deprived the government of collecting the 10% final tax. So there is imposed for each taxable year a tax equal to 10% of the improperly accumulated taxable income of corporations formed or availed for the purpose of avoiding the income tax with respect to its shareholders of any other corporation by permitting the earnings and profits of the corporation to accumulate instead of dividing them among or distributing them to the shareholders. So, we have the rationale. If earnings and profits were distributed, the shareholders would then be liable to income tax. Whereas if the distribution were not made to them, they would incur no tax in respect to the undistributed earnings and profits of the corporation. Thus, a tax is being imposed in the nature of a penalty to the corporation for the improper accumulation of its earning, and as a form of deterrent to the avoidance of tax upon shareholders who are supposed to pay dividends tax on the earnings distributed to them by the corporation. So who are covered of this IAET? The 10% accumulated earnings tax is imposed on improperly accumulated taxable income earned starting January 1, 1998 by domestic corporations as defined under the tax code and which are classified as closely held corporations. So this means nga this IEET is only applicable for those closely held corporations. So, what is closely held corporations? Those are corporations at least 50% in value of the outstanding capital stock or at least 50% of the total combined voting power of all classes of stock entitled to votes. The vote is owned directly or indirectly by or for not more than 20 individuals. So those individuals are belong to the said corporations. So those domestic corporations not falling under the aforesaid definition are therefore publicly held corporations and is not applicable to the IAET. So the IAET shall not apply to banks and other non-bank financial intermediaries, insurance companies, publicly held corporations, as what I said earlier, taxable partnerships, general professional partnerships, non-taxable joint venture, foreign corporations, and those enterprises registered with the Philippine Economic Zone Authority under RA 7916 and enterprises registered pursuant to the basis of Conversion and Development Act of 1992 under RA 7227, as well as other enterprises duly registered under special economic zones declared by law, which enjoy payment of special tax rate on their registered operations or activities in lieu of other taxes, either national or local. So, improperly accumulated taxable income is the earnings or profits accumulated beyond the reasonable needs of the business. Reasonable needs means the immediate needs of the business, including reasonably anticipated needs. So, given naman ni sa illustration pod. So, to determine this reasonable needs of the business in order to justify an accumulation of earnings, the so-called immediacy test is adopted in this jurisdiction. So, for the purposes of these regulations, the following constitute of earnings for the reasonable needs of the business. We have accumulated earnings up to 100% of the paid up capital. We have earnings reserved for compliance with any loan obligation under a legitimate business agreement. Earnings reserved for expansion, improvement, and repairs approved by the board of directors or equivalent body. Earnings reserved for building plants or equipment acquisition as approved by board of directors or equivalent body. Earnings required by law to be retained by the corporation or in respect of which there is legal prohibition against its distribution. And in the case of subsidiaries in the Philippines, all undistributed earnings reserved for the investment in the Philippines, as can be proven by the corporate records and relevant documentary evidence. So we have the proper computation of IAET as follows. We have taxable income for the year, additional components such as income subjected to final tax added to net operating loss carryover, added to income exempt from tax, added to income excluded from gross income. The total, we have less components such as income tax paid, added to dividends declared paid, added to amount reserved for the reasonable needs of the business. So, the total is equal to improperly accumulated taxable income multiplied by IAET rate, which is 10%, equal to improperly accumulated earnings tax. So, we have the illustration. Assume that in taxable year 2020, Peace Corporation, a domestic trading corporation, is subject to improperly accumulated earnings tax after having been assessed as retaining earnings beyond the reasonable needs of the business. So the following are related data. We have gross sales of 7,500,000, sales return and allowances 225,000, sales discounts 375,000, cost of goods sold 2,625,000. Deductions, we have deductions, we have 3,275,000. Interest income from BSA Bank under the foreign currency deposit system of 750,000. So as we all know, this interest income will be subjected to final income of 15%. We have also interest on notes receivable of 50,000, dividends from landscaping corporation, a resident corporation 100,000, dividends from crafts corporation, a domestic corporation 65,000, and also the capital gain on sale of gem and diamond corporation shares, a domestic corporation, to a direct buyer, also subjected to final income of 15%, and dividends paid of 800,000. So we have to compute the RCIT or regular corporate income tax and minimum corporate income tax. So the income tax to be paid is the higher amount between the normal tax or the RCIT and the minimum corporate income tax. So First, we have regular corporate income tax. Gross sales of 7,500,000. Less components, sales returns and allowances of 225,000 plus sales discount of 375,000 equal to 600,000. So gross sales of 7,500,000 minus 600,000 equal to net sales of 6,900,000. So also we have less components, cost of goods sold 2,625,000. So the net sales minus cost of goods sold equal to gross profit from sales of 4 million. Net sales minus cost of goods sold equal to gross profit from sales of 4,275,000. Additional components, we have other gross income such as interest on notes receivable of 50,000, added to dividends from landscaping corporation of 100,000 equal to 150,000. So gross profit from sales of 4,275,000 is to be added to 150,000. So equal to gross income of 4,425,000. So we have less component such as deductions of 3,275,000. So gross income minus deductions equal to net income of 1,150,000 multiplied by tax rate of 30% equal to the RCIT or normal tax of 345,000. So our regular corporate income tax is 345,000 pesos. So next, we have minimum corporate income tax. So gross sales of 7,500,000. We have less components, sales returns and allowances of 225,000, sales of added to sales of sales discounts of 375,000 equal to 600,000. So gross sales minus 600,000 equal to net sales of 6,900,000 minus the less components of cost of goods sold of 2,625,000 equal to gross income of 4,275,000 multiplied by tax rate of 2% equal to minimum corporate income tax of 85,000. So next, the computation of tax on improperly accumulated earnings follows. So we have taxable income for the year. We have 1,150,000. We have additional components such we have income exempt from tax such as dividends from crafts of 65,000, and we have income subject to final tax. We have interest from BSA Bank of 750,000, added to capital gain on sale of gem and diamond shares equal to 890,000. So, taxable income for the year to added to 890,000 equal to 2,040,000. So we have less components. Dividends paid 800,000, income tax of 345,000, and final tax income of 123,750. So kaning 123,750 gikan ni sa interest income from BSA Bank of 750,000 multiplied by 15%. Also, the capital gain on sale of gem and diamond shares of 75,000 multiplied by 15%. So that is 123,750. So 800,000 plus 345,000 plus 123,750 equal to 1,268,750. So 2,040,000 minus 1,268,750 equal to improperly accumulated taxable income of 771,250 multiply by IAET rate, which is 10%, equal to improperly accumulated earnings tax of 77,125 pesos. So our improperly accumulated earnings tax again is 77,125 pesos. So the period for payment of dividend or payment of IAET, the dividends must be declared and paid or issued not later than 1 year following to the close of the taxable year. Otherwise, the IAET, if any, should be paid within 15 days thereafter. So that's under our number 2, 2001, section 6. So next, let's move on to gross income tax for corporations. The President, upon the recommendation of the Secretary of Finance, may allow corporations to be taxed at 15% of gross income effective January 1, 2000. So this penalty tax is allow domestic and resident foreign corporations to be subjected to optional corporation tax of 15% based on gross income. So we have these requisites. All of the following conditions shall have to be satisfied in the allowance of optional corporate tax. We have a tax effort ratio of 20% of gross national product, a ratio of 40% of income tax collection to total tax revenues, a VAT tax effort of 4% gross national product, and a 0.9% ratio of the consolidated public sector financial position to gross national product. So, who are covered of this GIT? The option to be taxed based on gross income shall be available only to firms whose ratio of costs of sales to gross sales or receipts from all sources does not exceed to 55%. So the election of the gross income tax option by the corporation shall be irrevocable for 3 consecutive taxable years during which the corporations qualified under this scheme. So in gross income tax, the cost of goods sold shall include all business expenses directly incurred to produce the merchandise to bring them to their present location and use. So for trading or merchandising concern, cost of goods sold shall include the invoice cost of the goods sold plus import duties, freight in transporting the goods to the place where the goods are actually sold, including insurance while the goods are in transit. For manufacturing concern, cost of goods manufactured and sold shall include all cost of production of finished goods such as raw materials used, direct labor and manufacturing overhead, freight cost, insurance premiums, and other costs incurred to bring the raw materials to the factory or warehouse. So we have the computation of gross income and tax due for a trading or merchandising concern and manufacturing concern. So we have gross sales, we have less components such as sales returns, sales discounts, sales allowance equal to net sales. We have another less components, cost of goods sold or cost of goods manufactured and sold equal to gross income multiplied by 15% equal to gross income tax due. So we have this illustration. Excuse me. Earth Corporation, a domestic merchandising corporation, opts to be taxed under the gross income taxation for the taxable year 2018. Compute the gross income and the gross income tax if its financial records show the following. Gross sales of 15 million. Sales returns and allowances 600,000. Sales discounts 450,000. Cost of goods sold 6,750,000 and deductions of 3,375,000. So we have the computation of the gross income formula for tax for merchandising and manufacturing. We have gross sales of 15 million. We have less components such as sales returns and allowances of 600,000 added to sales discounts of 450,000 equal to 1,050,000. So gross sales of 15 million is to be subtracted to 1,050,000 equal to net sales of 13,950,000. So we have less components. Cost of goods sold, we have 6,750,000. So subtracted. Net sales is to be subtracted to 6,750,000 equal to gross income. We have 7,200,000 multiplied by 15% equal to gross income tax due of 1,080,000. So that is for merchandising and manufacturing. Also, if you notice, The gross income computation for purposes of gross income tax and MCIT are the same in the case of trading or merchandising and manufacturing concerns. But in the case of a service business using the cash basic under the MCIT concept, cost of services is being deducted from gross receipts to arrive at gross income. This is in the contrast to the gross income tax concept, where cost of services to arrive at gross income is not a consideration at all. So, next, the computation of gross income for taxpayers engaged in the sale of services follows. So, we have gross receipts. We have less components such as sales returns, sales discounts, and sales allowances equal to gross income multiplied by 15% equal to gross income tax due. So, we have this illustration. For the taxable year 2018, Merit Corporation, a domestic company providing for art, design, services, opts for the gross income taxation. It has the following data. Gross receipts, 10 million. Sales returns and allowance, 400,000. Sales discounts, 500,000. Cost of services, 4,500,000. And deductions of 2 million. So, gross income tax for sale of service computation. Gross receipts, we have 10 million. We have less components such as sales returns and allowances of 400,000 added to sales discounts of 500,000 equal to 900,000. So gross receipts subtracted to 900,000 equal to gross income of 9,100,000 multiplied by 15% equal to gross income tax due of 1,365,000 pesos. So, this gross income tax due is for sale of service. So, remember, for merchandising and manufacturing, the ratio of cost of goods sold to gross sales is 45% from 6,750,000 over 15 million. And for sale of service, the ratio of cost of services to gross receipts is also 45% from 4,500,000 over 10 million. So, that's the end of our discussion. Thank you. And thank you.